I've made several videos reviewing the subject of support and resistance, and I feel that we could never make or cover this topic, make enough. So here we go again with the dollar yen. This is the 30-minute chart. Now, here we have a clear range of consolidation. There really isn't any confusion here as far as trying to call this a support, I'm sorry, a resistance level or this one. But for those who are new to this method, it might be a little bit confusing. You're trying to find the most significant price swing or high and low to identify consolidation. Here, with this low range here, we have no problem. We know that there's one spike low. Taking our crosshairs, we want to look to see if anything lined up and hit twice, maybe 3 times, that kind of thing. But for the most part, we know that this is a clear low. So this is the low of our consolidation. This is the high right in here. But we've got to go with what started the price swing. Here is a clean price swing that moves all the way up, makes a new high, and stops. Nothing goes any higher than that. If the 30-minute chart shows this price swing a little choppy with some retracements in here, as you can see, we've got a couple of little pullbacks in here. Go to the 1 hour chart. And the 1 hour chart is going to show all that price activity much more smoother. And if that doesn't help, then go to the 4 hour chart. Here's the 4 hour chart. So you follow what I'm saying here, that trying to identify significant support and resistance on a smaller time frame where you are able to identify your entry, when you go down to these smaller time frames, it makes it difficult to identify and keep track of the most significant support and resistance on the larger time frames. So just click, if you've got MetaTrader or whatever chart package you're using, here's the 30-minute. This is the 1 hour chart. Again, here's that price swing. We're looking for a clean, clear price swing. Once again, here it makes a high, everything else goes sideways after that. Nothing really goes too much higher. Now, if this was, for example, a small tweezer and price moved a little bit higher, I'd probably start off with this line here, recognizing the move higher, but noticing that no candle bodies closed above that resistance level. And I'd still use that as my potential first line of resistance, watching for price to break out either above or below that range. So again, we've got support and we've got resistance. Now, my trading method, the 30-minute scalping method, I'm looking to use that candle pattern, the Tech 1 candle pattern, at very specific locations. One of two places. Either at major support or resistance, taking into consideration consolidation here. For example, here's consolidation. It's possible to call this high and this low a pretty significant resistance, or support and resistance level on this time frame. This is a 30-minute chart. So it's possible that you could trade the Tech 1 candle pattern when it hits support here or when it hits resistance. However, it hasn't yet. Here's resistance actually inside of this range. But we've got to notice that this range is about 60 pips or so. That's really not sufficient. It's not enough room here. If price is moving sideways on this pair, there's a reason for price to be moving sideways on this pair, and we've got to identify it. We have to be aware of what's happening, even if we're trading the euro dollar. We want to be aware of what the dollar index, this is the US dollar index. We want to be aware of what it's doing. Here is the 30-minute chart for the US dollar. We've got a low and a high. Again, here's that clean price swing, low and a high, and everything stays inside of that range. So to me, this is consolidation on this pair. So if, for example, the dollar yen is moving sideways, I want to be careful taking a trade on, and I'm going to show you the euro dollar. If the euro dollar is falling, I don't really want to expect that the euro is going to continue to rally to these far, far levels or hope for the next support level that I can find on the 4 hour chart. It might happen, but I want to take pieces of it. As they say, bears make money, bulls make money, pigs get slaughtered. We've got to be careful. We want to take pieces of trades, not hold out for every single last pip. We want to take pieces and look at potential targets that repeat themselves over and over again. In other words, with the type of activity that we're witnessing, taking into consideration the dollar chart here with this price swing, noticing what other currencies are doing. Here's the dollar yen. we don't want to expect a whole lot. Now, it's possible that it could rally and could move far, but that's got to be something that's driving the euro or driving the dollar. We have to be able to identify that. If it's just a regular, casual day, you can't identify what is really moving the markets, and you see things moving in tight ranges, don't expect a whole lot. Be careful. It doesn't mean that it's going to be like that every time. There are times when the euro will rally and move all by itself for its own reason, economic reasons that have everything to do with the eurozone and the US dollar. It doesn't happen often, but it can and it will. So we've got to be aware of what's taking place in all markets. Back to my example, here is this consolidation range. Here's our consolidation range on the dollar index. If it doesn't look too clear, again, just click the 1 hour chart. Here's the 1 hour chart. It looks a lot smoother in here. So try a couple of different time frames just to get a good feel of what you're seeing. Make sure that you're identifying the right consolidation range. Back to my example, we take the Tech 1 scalping opportunity at 2 different locations. Bounces off of support or resistance, especially major or significant support or resistance, but I prefer to use them on the 4 hour charts or the daily charts. It's got to be a significant support or resistance on the 4 hour or daily chart. We don't really see that here. So I'm going to leave any opportunity that I see in here, a Tech 1 candle pattern, alone. The other time we take the Tech 1 candle pattern or the scalping opportunity is when we get a candle that breaks out of a consolidation range, something similar to this. This is a really clean consolidation range. But we get a candle that breaks out of a consolidation range, whether it's up or down. We wait for that move, for example, if it was to move back down. Wait for the retracement. Wait for a pullback, for example, if it broke out to the downside. We would not participate in the breakout because we don't know for sure if it's going to be a head fake. So let it confirm itself. Let it do the work. You just follow it. Wait for the retracement back up to, this could be potential resistance. Remember, old support can turn into potential resistance. And it doesn't have to be exact. It might hit it on the number and not go any farther. It might move a little bit further. Sometimes it won't even hit it, yet still qualify and give you that retracement, that Tech 1 candle pattern to short it again. You'll have much more time to identify market sentiment, economic data, even if it is 2 or 3 hours later. It's better to wait 2 or 3 hours for a safe trade that you can confirm with not only the currency that you're looking at, but economic data, market sentiment, and other currency pairs as well. Because it's possible you might see something that sets up on the US dollar that also confirms a trade here. Let's go to the the euro dollar. Here is a perfect example of just such a trade. We've got a continuation signal candle here, which is, here is this consolidation range. I drew it a little bit lower here, but we've got a high and a low, and for the most part, everything moves inside. Here's non-farm payroll. This was June 5th, non-farm payroll. Everything moves sideways. It's still a range of consolidation. It may be a big range, but it's still consolidation. Once we get that candle that closes below that low, on the 1 hour chart, we wait for the pullback, and here's our Tech 1 candle pattern. But before I go to the 30-minute chart, I want to identify that candle. Let's do it with a check sign. So again, here's our continuation signal candle. Here's the breakout candle of this consolidation range right in here. So we wait for a safer entry. We wait for this pullback. Here's our Tech 1 candle pattern. This is the 1 hour chart. We'll go to the 30-minute chart. It gives us a smaller stop. If we enter here with this candle closing and breaking outside of this consolidation range, well, we're for the most part going to have to just pick a stop loss number, and that's not always the safest thing to do. So we need to minimize the stop by identifying a clean price swing and candle pattern. Let's go to the 30-minute chart. Here is our Tech 1 candle pattern. So you'll notice how clean all of this is. It's easy to see. Toggle back and forth between the 1 hour, identifying your breakout candle, and the 30-minute, looking for the Tech 1 scalping opportunity. Here's all of this indecision. There was not a Tech 1 candle pattern in here until this candle closed. We enter on the close of this candle, and here's our profit. There are other opportunities, but this is really what sets up this breakout. And again, trying to identify these clean, clear support and resistance levels will help you identify whether or not you're seeing the correct Tech 1 trade. The other thing you might want to do is label your ABCs on these price swings. Here you have a high, here's an A, so we'll go with an A here. Here I've labeled this time frame, this is a 1 hour euro dollar chart, A, B, C. Here we have this A, B, C, and this helps identify this high of consolidation inside of this range. It really does help. So keep track of your A, Bs on any time frame that you're trading off of. It doesn't matter if it's a 30-minute or a daily chart. These trades will set up all over the place on just about every currency pair. It's just a matter of being patient and waiting for them. It's possible to get 3, maybe even up to 7 of them. They all work effectively. We're using a 1-for-1 risk to reward ratio. We're looking for 20 or 25 pips as a target and 20 or 25 pips as a stop loss. And the trades work relatively quickly.